Hello everybody, very good morning to you all and welcome back to howtotrade.com. Welcome back to another live stream here in our trading room and across our social media channels this morning. I do apologise, I'm on slightly later than the 8 o'clock start time because I couldn't get YouTube to work, which is typical of a very early Monday morning, but we have managed to get it working. So not the ideal start to the week, but I do apologise, but we're on now. And I hope everyone is doing okay. And if you are around this morning, I appreciate it is early on a Monday, but if you are around, feel free to pop up and say hello. And be good to hear from you. Right. What we're going to be doing today is the normal thing that we do, which is obviously to go through the top events and opportunities of this week. So we're going to have a look at the economic calendar, just do a quick rundown. It won't take too long. And we're going to then look at the charts to see if there are any market opportunities or what, not if there are any, what are the best market opportunities for this week. And that's what we're going to be doing. Now, I know people may not be on this stream, but I'm going to be updating everyone on every single stream. And that's that I have a bit of news. So I'm just going to come out and say it. This will be my last week here at How to Trade. So this will be my final, 5 streams. Very nothing else really to say, to be honest, other than that. Just that I'm going to be moving on to a different venture, and I know a lot to How to Trade, and we're still going to be keeping in contact and stuff like that. And there's nothing bad has happened or anything like that. It's just I'm going to be moving on to a new opportunity. I'm actually going to be moving away from this country as well. So from the UK, I'm actually going to be moving out to Dubai in January. So yeah, bit of a change in my life. So I'm not actually going to be here at How to Trade anymore as of next week. So this will be my last week here, which is sad because it's been a fantastic 2.5 years now. So hello to you all anyway. Jay Brad's good to see you. Ivershen, hello to you. Greetings from a blistering hot Thailand. Hello to you. It's a freezing cold, wet UK as well. Shard, hello to you. Good to see you, and thank you very much for the message. Leaving when I join. I do apologise. I know for some people it won't be ideal, but yeah, I will be moving on. So when it comes to and thank you very much, Shelley. All the best for your future. That's very, very kind of you. It's an exciting opportunity. What I've got, I'm looking forward to it. I'm still going to be in this space, so don't worry about that. I'm still going to be doing a similar thing. Thank you very much. I appreciate that. Okie dokie. Right, let's have a look at the economic calendar. We'll keep it nice and light. So we'll go to the next 7 days, and I've actually not done this yet. It's 8 o'clock in the morning for me, so literally I've looking at the markets for the first time, looking at the calendar for the first time, really, and we're just going to get a feel for what sort of events we should be focusing on this week and where the sort of volatility is going to be. So straight away off the bat, I can already see some data out of Australia and out of New Zealand. We have the monthly consumer price index data coming up on the 27th. And then we also have the RBNZ interest rate decision. So if you trade the New Zealand dollar or the Australian dollar, this week will be be a good start to the week to trade that. That is on November the 27th, which is a Wednesday. So what I'm getting straight away is that we're sort of coming into that Christmas period, and it's a really odd time to be in the markets because you do get volatility, you do get opportunity, but things just start to tail off slightly, and it's really weird when you watch it happen because I normally work all the way through Christmas, so I probably won't be this year. So I'm going to be doing what a lot of people do, and that's where they sort of shut off from the markets for the year. People start balancing their books for the year, and you get those random pockets of volatility. And I know we're still a month away, but it comes around quick, and this week isn't a huge week in terms of economic drivers again, and I do apologise because last week maybe wasn't that either. There were still some great moves, don't get me wrong, we saw great moves in the commodities market, but when you're sort of planning for the week, it becomes a bit more difficult because there's no set event where you're like, that's going to trigger the volatility. On Wednesday, we have got the core PCE and GDP. So Wednesday is probably like your most volatile day of the week. GDP is gross domestic product, so that measures economic growth. And then we've also got core PCE, which is our the Federal Reserve's primary tool for inflation. So normally we use CPI, but PCE is the one that the Fed likes to use. So volatility in the US markets is probably going to be heightened around that time rather than anything else. And then as we go into Thursday, again, it's a bit of a weird one. There's some inflation data out of Europe. There's some inflation data out of Japan. It's high impact, I know. So if you're trading in the Japanese yen, then maybe that's something to bookmark. But I wouldn't say it's going to be like groundbreaking, to be honest. And then we have inflation data out of Europe as well to end on Friday. So Wednesday afternoon is sort of the day where I think the volatility will be at its highest, but I'm expecting a week which potentially I'm not saying it's going to be a dull and boring week. There's still going to be plenty of opportunity, but I wouldn't say it's going to be it's not like an NFP week, which we would have the following week, which would be exciting. Thank you very much, Evershen. I really appreciate that. That's very kind of you. Obviously, there are people who aren't on the stream, so I'll make sure I update them as and when. So, okay. Now we know that, let's have a look at some of the market moves that we're looking for this week. And quite an interesting one. I mean, Marco put it in the chat as well. And that's that we're seeing some fair value gaps. The dollar in particular. See these gaps? Now, what I'm going to do on this stream is, because this is a sort of opportunity for right now, opened up here, FVG, that's basically where there's a gap in the market, which you can see here. We're going to use the 50% of these fair value gaps, keeping it really simple. I'm going to give you guys some fair value gap trading opportunities today and what that looks like. So there's one on the euro dollar, potentially targeting this resistance area at 1.05. Let me get rid of these. You don't want them on there. So there's a euro dollar fair value gap trade. Very, very similar thing on the pound versus the US dollar, which is this one. I'm just trying to get that 50% right. It's important. These are like your early Monday trades that you can sort of maybe, start the week with some nice bit of profits. There's our 50% for the pound versus the US dollar. So again, a trade as per fair value gap strategies will look, a little bit like this. There's a 3-to-1. And to be honest with you, look, we could go through all of them. Now remember, when you draw a fair value gap, obviously I'm experienced enough in doing it now, but the way you draw them is you draw it from the close of the candle, of the Friday candle, and the open of the Monday. So the Monday would have opened there and the Friday would have closed there. Okay. Now before you jump into these trades, just let me mark them all first, and then I'll tell you what I think the best thing to do is. I'm going to ignore that one. I'm actually there right now. Now, before you jump in, thank you for your patience there whilst I was just marking them all. The best way to trade them, especially when you get gaps on on Forex over the weekend, because you'll see the gap on all the pairs, and you're probably screaming out to me and going, well, which one do I trade? Which one do I use? There's two ways you can do it. You can split the trades between all of them, and say you're going to risk 2% on one, you'd split that 2% between the 5 markets and you'd do 0.4% on all of them. It's a good way to do it. The other way to do it is you do the one which is tested last. Okay, so you can see this one here on NZD USD. That's now been tested at 50%. I always use the 50% if it's a bigger gap. The USD CAD one's been filled. NZD USD, so I've just said that. AD USD has pretty much been filled, or it's been filled more than the others. Dollar yen has. USD Swiss franc hasn't been tested just yet. Euro dollar hasn't been tested just yet. And the pound dollar hasn't been tested. So out of those 3 markets, pound, euro, Swiss, use the last one to be tested, because the last one that's tested is the market which is the currency which is the strongest against the dollar. Does that make sense? If you wait, say for example now we've just had the pound dollar touching, but the euro dollar hasn't tested yet, and neither has the Swiss franc. So now we're out of these two, because they're at the moment the strongest currencies against the dollar. So I'd always use that one. That's the one that tests last. And really, that's a good potential trade idea for today. Was a little bit unlucky here on gold because we did have a reaction from this area of supply. But if you did trade the actual supply zone itself, you would have just been stopped out. We reached 2720 and then we've fallen. So I'm going to have to reassess gold a little bit because you can see there's a nice reaction here. What's the trend rider saying? You can see it's a bit iffy on the trend rider as well. It's not really a mark. It's not really showing me any clear signs because it's quite an aggressive candle for a Monday morning. So I imagine that there's going to be some buyers stepping in here on gold, and that was a really bullish close at the end of last week. It was a really bullish week actually in the end. So I'm interested to see how this one goes. I'm going to let that price action play out a little bit more, but you can see the commodities are down, and there's definitely more pressure being applied to silver than there is for gold at the moment, even though the bullish structure of silver is actually still intact because we haven't actually broken down below this low yet, and we've actually tagged into that imbalance area. So I'm interested to see where gold goes as well. We absolutely nailed this NASDAQ analysis. Multiple. This is where sometimes Fibonacci is really good, and I am a smart money trader. That's why I use Fibonacci in conjunction with the others as well, because you can actually see multiple support, multiple buyers stepping in, or multiple areas of support at 20,400, and that really played out so nicely. We had a nice demand zone in there, tagged in. So if you did manage to catch on to that, then that's great. Again, we've got another fair value gap, which seems to be the story of this week. So again, let's mark them, because these make the backbones of our trades for the first bit of this week. Loads of fair value gaps today. So I'm going to mark them all. By the way, look at that. Beautiful. We're going to mark them all. And again, what we're going to do is obviously mark that 50%. In fact, for this one, because the gap isn't that big, what is it, 5989 down to, you just might want to ignore the 50% and just use the actual fair value gap itself. So again, out of the S&P 500, the NASDAQ and the US 30, use the last one to test the fair value gap. Whatever one tests it last is the stronger of the three. And we want to buy on the test of the fair value at the open of the fair value gap. So like here, not the 50%. With the Forex ones, the gaps were a bit bigger, so the 50% was okay. Whereas on these ones, I think maybe it might be best just to use the actual fair value gap itself. If you want to use the 50%, that's fine. You'll get a better risk reward, and you'll also have a chance of not managing to get in onto the trade because these markets are quite bullish as well. So, okay, oil. Yeah, Oil sort of stuck in that range now between 72 and 67. There's a potential area of... I'll update you on oil. Oil is not really clear for me at the moment. It's just an absolute mess to try and trade. My thought here is that we're sort of forming a base. If we get a breakout above 73 or 72.8, then I'll turn bullish on oil. But for now, I'm just going to let that price action sit out. And really, for today, that's sort of is it. We're talking about fair value gaps, loads of them. So I'm going to be active on the charts, looking at these fair value gaps and trying to get... So those FX ones, the 50% looks great. The stock market ones, I'm going to try and get in on the last test of the actual fair value gap itself, so right at the start. Barnacle, thank you very much for your kind message. That means a lot to me, and I appreciate that. Hello to Kurtz and hello to Bobby, and I hope you are all doing well. And really, that's probably it for now for this week. It's actually quite good that we've got some good fair value gaps to trade from, because if it wasn't for that, I think I was going to be struggling. But luckily, we have got some good fair value gaps. So that's the order of the day for now. I'll post one of them in the room, and if anyone does need me in the meantime, feel free to drop me a message. And I hope everyone has a fantastic trading week, and I'll update you as soon as I've got more, and keep an eye on those fair value gaps. Cheers, everyone. Bye.